Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, May the 30th, Memorial Day in the US of A. The year's 2022. Let's talk trading. Risk, Part 17 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. I had a trader, they posted a question out on YouTube and was asking about the waypoint exits of the exit playbook. What they meant by waypoint exits is it's like if you're 5 pips up, or entry plus 5, entry plus 10, et cetera, break even plus 1, break even plus 5. How do you go about setting those? And he also wanted to know that sometimes if you see the trade going against you, that you will exit before it even hits your stop loss. And he went a little more detail about that. Well, the first response is this is the art part or the experience part of trading. After you've traded something, for a couple thousand hours, you get to know it. And Walmart, you call the market, a living and breathing animal, and we've talked about that on videos more than once. In fact, yesterday, when I had the chart up in the video, I was saying how, you can look at the trade, and price was right around 26.50, if I remember correctly, and it was pulling back. It's like, do you exit at the 50? Do you exit when it broke the previous candle's high? Do you wait for a lower low? And we watched price continue up, and then price turned and started to come back down. So it's just one of those things where you decide on, if you're in profit, hey, enough is enough, and if you're losing, enough is enough. And so Walmart, I'll throw the question to you, see how you like to respond.
Yeah, I think you really covered it really well there. Excuse me. Yeah, it's the type of thing where, those, with the exit playbook, what that's really there for, or at least in my mind, what it's really there for, is to prevent you from doing something catastrophically stupid. I don't know any other way to put it. It's going to prevent you from doing something that you're going to be really sorry about later on in the day. And what I mean by that is that, I'm all about capital preservation. And so for me, using that indicator, it's just that. It's just to go and make sure I preserve my capital and make sure my capital stays in place, and just knowing that's there, it gives me a little bit of freedom. And what I mean by freedom is that a little bit of relaxation. I know that I can't make a mistake that's going to go and really cost me unless I go and do something really foolish, and that is ignore what the indicator is telling me.
Well,
So
Walmart,
that's what
I don't think they were really talking about the indicator. I think they were talking more about the exit playbook, like the spreadsheet
Okay.
that I
Okay.
put out there.
Okay. Yeah. Well, even that, I'll just go and turn it a little bit. Yeah, because for me anyway, when you go and use that spreadsheet, that's based on trying to go, for me anyway, and I think every trader needs to do this. I think what you put out there is great, and I think it's a great template for folks to go and follow. Especially in the beginning when they're just first starting out and first learning. But what you need to do is take that spreadsheet and maybe modify it a little bit to make it work with whatever your style of trading is, whatever your risk appetite is, all those good and wonderful things that we all have to go and figure out on our own. Because, TROs, I can't tell a trader what to do, and you can't tell a trader what to do. All we can do is just give them some helpful hints, and help them out in that fashion. And that's all we can do. But once the trader gets to that point where he's able to lay that out, you then use that spreadsheet basically to keep yourself out of trouble. At least that's how I look at it. I know that you can also use it even on the profit side. I tend to just use it on the when I'm getting into trouble on the loss side, and just preventing myself from going and getting myself into trouble. Now, the question is, though, okay, let's say the spreadsheet, I lay out the spreadsheet and say I'm willing to go and lose 10 pips or 7 pips on this particular method, this particular type of trade, this particular time of day, this particular instrument. Okay, well, the poster, he rightly says, well, Walmal, you say all the time that you get out early. Why let it run all the way against you? How do you know what to do there? How do you know to go and do that? Is there, I think he even used the word, is there a simple thing that you can do that you can lay out so that you don't do that? And honestly, the answer is no, there isn't. Again, that comes down to exactly what you said, TRO, and that is that it becomes, a little bit of an art, a little bit of experience, and you learn to do it. So in the beginning, yeah, you rely upon that spreadsheet to help you out, to go and lay things out for yourself, so you don't get yourself into trouble. But on the other side of the coin is that as you get more experience, and you say, you know what, I know this thing. Let's say I went into a trade. Let's say I was going and doing a rat reversal trade. We're at the low of the day. We're doing a rat reversal trade, and I get into the trade, and it just doesn't go and do that reversal. It doesn't go head back towards the middle like you would want a rat reversal. Why would you let it go and run, 10 or 15 or even 20 pips against you before you recognize that the trade has failed? You and I both joke around all the time that we know it's going to break this line. The question is, does it do it on the first time? Does it do it on the second time, the third, the fourth? Is the fifth time the charm? We don't know. And so, we just don't know when it's going to happen. And so what we can do is, as you get better at it and you recognize that, hey, this thing, let's say we're looking for a long trade, and it just becomes very, very apparent, through experience that, hey, this is not going to make it. Let me go and take a, 3 or 5 pip loss here, as opposed to, getting into a really, really big drawdown period here. Yeah, it'll probably come back, but the problem is, do I want to be sitting there on the books being down 20, 25, 30 pips maybe? That's crazy. In my mind anyway, that's crazy. You know what? I'll go and take the 3 pip, 5 pip loss and just say, that's a cost of doing business. And trading it's a business. It's a business like no another, but it is a business. And anytime you run any type of business, there are costs and things that go against you. If you're a company that delivers products, you're a moving company of some sort. Well, guess what? Your truck breaks down there once in a while, and you have to pay for the upkeep of it. And that's just the nature of anytime you go and take a risk by being in any type of business.
Yeah, you said something good there, reframing the loss as a cost of doing business, where that might help some people absorb the loss. Because that's one thing about me, I hate losing. I hate losing with a passion. If I lose, I want to do it again. It's kind of like one of my pool playing buddy. I nicknamed him the professor, because anytime I make a mistake, he takes me to school. In fact, the last time we played, I think he beat me like 12 games in a row. I mean,
Oh my goodness.
he just cleaned my clock. But it's one of those things where, you miss an easy shot and the table's pretty much wide open. Your opponent's just going to end the game on you. In fact, I even missed like 1 or 2 8-ball shots. It's just like, that was it.
Yeah, that happens in trading though too. There are times when it's the type of thing where I take the trade, and I get nicked. Lose 3 pips, lose 5 pips, lose 3 pips, lose 5 pips, and then what happens is I'm frustrated. This is not going to work, and then I don't take the trade, and that's the one that goes up 15, 20 pips, and unfortunately that happens in trading, and we have to go and say, man, no, that's the cost of doing business. You have to go and say, you have to take your little nicks, and just make sure your little nicks are not, gouging sores that you're having lots and lots of problems that you can't go and get back from.
But then,
That's the whole.
your R&R risk reward traders, they're going to say, yeah, but you know what? It'd be a, death by 1,000 losses type of thing. I can already hear
Oh,
that.
oh, I know. oh, I don't have an answer for them other than the fact that, I'm not doing, I agree with them if you're going and doing, swing trades and things like that, where you're playing a trade out, you're putting on one trade for the day, maybe one trade for the week even. I would agree with that, but that's not what we're doing. What we're doing is we're taking a lot of little trades. And so what happens is you do get, you can get nicked up pretty bad, but the thing is, the good thing is that we know statistically that we win in the long run. And that's the great thing about it. So, you went and said that you think you lost 12 times in a row playing pool. Well, you know what? You can lose 12 times in a row, trading. It's unlikely, but it can happen. But the nice thing about it is, because statistics are in our favor, at least all the methods that I use for the most part, they're all sitting there with 75%, 80% of the time you actually win the trade based on the frequency distributions. Well, guess what? If I lose 12 trades in a row, there's a potential that I could also win 12 trades in a row. In fact, I could win 15 or 16 in a row. That's how you make your money, and like today, I'll give you the example for today. Today I've taken 10 trades, okay? And I've got 9 winners and 1 loss. It's just, today's been a very, very good day for me. But there have been days, like there was a one day last week, I talked about it on a video, where it was I just quit trading, because what happened was I'd win one, I lose one, I win one, I lose one, I win one, I lose one. And I said, okay, I'm basically back at flat. It's time just to walk away and say, that's enough for the day. I don't know if it's the market. I don't know if it's me. I don't really care. I'm just going to walk away, and I'll wait for another day. And because the most important thing, again, I'll say it again. I know I'm a broken record here. Preserve capital.
Yeah, but let's just tell the boys and girls and non-binary traders that once we got on the phone, you took more trades and you were up about 18 or 20 pips for the day.
I was, but part of that is that what I also did was, and I admitted to you that I went and took like a 3-hour break or a 2-hour break, get into a different headspace and just, walked around, did things outside, played with the grandkids, all those type of things that just can put you into a different set of. So it was almost to me like doing another session, because it was just completely unrelated to the morning session, when I was trading mostly London, and then I was trading late New York session, but it worked out well, and sometimes you got to do that, and that's part of, I say this all the time, and but you got to know yourself, and if you know yourself that you're the type of person that gets frustrated easily, and well, then you need to go and find things that are going to go and work in your favor to go and get to the other side of that.
Well, the question though is, you went away for a couple hours, came back, but now looking back, was it you or was it the market?
It was the market. Looking back at the market, because I went back on Friday, I went and spent some time looking at the charts, and it was definitely the market. And sometimes the market does that. And then what it became was me. Because what happened was I got frustrated, and then I started taking low probability trades. And say, what's a low probability trade? Well, I like to go and have a confluence of things happening at the same time. So if I'm taking a high low trade, I like having a box there. I like having the 3LZZ there. I like going in the direction of the hourly candle, or at least the M30 candle. I like having all those things in alignment, and I found myself going and saying, well, 2 out of 5 ain't bad, so I'll just take this trade here. Well, no, because that's not the way I trade. That's not the normal way I trade. In fact, like I said today, I took 10 trades, okay, and every single one of those trades I took with, all those things being in place. Yeah, I lost 1. That's okay. I won 9, but every single thing was in my direction, or everything lined up for me perfectly. So that was good, and that's how we have to go and do things. We go and sit down and we work on our method for, I don't know how long we work on our methods and how we're going to trade. and then we go and do something silly where we don't go and follow the method. Well, I'll give a new definition of insanity. Insanity is usually, we define it as doing the same thing over and over again and expecting something different.
Yeah, and guess what? The fastest 15 minutes in trading is up. So, boys and girls, non-binary traders, I hope that helps, because it's not what you trade, it's how you trade it. So drain the banks. This is the Rumple One, over and out.